Welcome to Daily Tax Savings. This is Tony Novak here to share viewpoints on saving taxes and staying out of tax trouble. Today's episode is about receipts, and it's really just a mashup of miscellaneous points about receipts that I've noticed or questions that have been asked over time. So let's start with the fundamental tax issue that comes up most often, and that is IRS requirement for receipts. We are all required to justify our business expense, and that typically requires a receipt for expenditures over $75. That's the general rule. But just like in all other areas of tax, there's all types of exceptions to the general rule. My suggestion is, rather than memorize and learn all of the exceptions, just adopt one simple procedure that seems to satisfy all requirements, and we'll get into that. Second point is, in my coming up on 40 years of practice, I have never been involved in a case where the ability to produce or not produce receipts for transactions was a deciding factor in the outcome. Yes, having receipts tied to transactions creates a strong impression and the credibility of the books, but not having it has never sunk a taxpayer. We look towards other factors to determine credibility of the evidence produced, whether the taxpayer is credible in their reporting of income and expenses. Another point is that modern technology, of course, all of us are using some form of electronic banking. The electronic banking receipt, which captures much of the information would be on a paper or other electronic receipt, flows through to the bank account transaction, and that is most of, but not quite all of the requirements necessary to meet IRS justification rules. So if we then take the next step, many of our programs and technology today actually prompt us. We run a debit card, we run an online transaction, and we get a little pop-up text message. Hey, do you want to scan a receipt with that transaction you just wrote? That's great. We can if the paper receipt, hold it up to the phone, clip it, and it immediately attaches. Multiple programs do that now. So the next likely question is, does the combination of the photograph of the receipt with the bank records transaction combined together always meet IRS requirements? The answer again is no, usually, but not always. There are some cases where an additional supplemental information is required to meet IRS requirements. The most common one that I can think of is a restaurant meal. So the restaurant meal, the expense flows through your bank account, and you have that. You know when it was, where it was, how much it was, and the paper receipt will actually show the detail. It wasn't a 3-martini lunch. It was actually just a normal lunch for three people. But what's not included is the business purpose of that, which must be kept separately or somehow added from your diary or other contemporaneous journal. So we still can need additional information to justify those things and types of receipts. Finally, storing receipts. We have all these paper receipts. I hate them. I throw them on the floor of my truck, and then I just crumple them up and throw them out most of the time. But it used to be, up until recently, I kept a separate big envelope for every month and threw them in there, and never used them. Maybe once or twice in a year, I might be looking to search a transaction. So, but lately now, last couple of years, I only save a few important pieces of paper in an envelope for each month. That may include receipts, it may include other documents, but I save very, very little paper anymore. And it's never been necessary. I guess one last point here is when receipts are available, when taxpayers bring the proverbial shoebox, or in one case I can think of cartons of receipts, does that actually help your uh, tax situation, your tax case, a tax dispute? The answer is no. I have had multiple cases where revenue agents they just don't have the time. They're not required to look at receipts. They simply won't do it. They will evaluate the credibility of your expense report based on something other than pulling out the receipts. And that infuriates some taxpayers. I saved all these records. I have them categorized, indexed, cross-referenced, checked off. The IRS isn't even going to look at them. That's not the main point of an audit, and nobody has time for that. So I point that out as a final reminder. We look for credibility of your overall financial positioning and financial communications, rather than the downline of transactions back to a specific paper receipt. So if you have any thoughts, comments, feedback, stories to add to this, I'll bet you do if any accountants are watching. We'd love to hear. Find me online through social media or one-on-one at taxproblems.cpa. And I'll be back tomorrow with another Tax Savings Minute.